one of Italy's very best ice creams. There it is. If you look at the markets, for example, the S&P for the past few weeks, it basically hasn't done anything. So the reality is that in the summer, for the most part, it's not worth pressing bets. If there are trades to do, by all means, do them, let them come to you like you would in any other period during the year. But particularly in the summer, you want to make sure you let these trades come to you and don't press them, because it's very easy to start getting into a very volatile period when you think it's calm sailing, or vice versa when you think the market's about to blow out one way or another, and then we are stuck in a trading range for multiple weeks like we just did. Actually, there looks to be a storm brewing here. You may not be able to see it on camera, but maybe that's a precursor for the markets. I don't know. Reality is that during the summer months, a lot of people are on vacation and not very much focused on the markets. It's a redundant statement to make, but a lot of people somehow seem to forget that. So the financial media, for example, is always every single day spewing information, but that doesn't mean that you have to do something. It doesn't mean that you have to actually act upon anything that's taken place. What's important is that you let the trades come to you, you look at the high probability trades, and you pretty much forget everything else. Try to take some time off. Before you know it, we'll be back into the September-October period, and things will get much more interesting and much higher probability in terms of trading. Okay, so here are the charts. Let's have a quick look at a couple of sector charts, and then we'll talk about a trade in Facebook as well. But real quick, first, the S&P 500, I should say, and you can see that breakout here has been very apparent. Once we got above 2120 or so in the S&P, we quickly rallied to about 2175. Now, I do think immediate term we are overextended. I would expect, unless this was a complete breakout fakeout, we would at the very least need to first retrace back at 2115, 2120 before we have a better chance of maybe getting to 2200. So to me, chasing the S&P higher here is a low probability trade. I would think we have to first retrace back to the previous breakout point. So that's the S&P 500, just for a little bit of perspective. Number two, let's quickly look at the IYT. This is the transportation ETF. We continue to see a series of lower highs being made here, and you can see once again that the transportation ETF, the IYT, has made so far another lower high. We pierced back above resistance, but we're now basically having quite a bearish reversal take place here. So to me, that breakout in the transports is not yet confirmed. We're breaking back below it. A very similar situation taking place in the financials. You can see the financial, the XLF, looking much more constructive than it's looked, as far as I'm concerned, for the better part of 2016. In fact, I would arguably say for the better part of the past 12 months. And we're now consolidating right below technical resistance, but it's not yet happening. We're not yet seeing a sustained breakout above there that I would consider to be more believable. Last but not least, another chart I want to point out is Apple, and you can see I drew in a couple of errors here already. You can see there's been 3 times now over the past, call it 9 months or so, that Apple has pierced above its 200-day moving average, which is that red line you guys can see here on the chart, and also above this diagonal resistance line, or marginally above this diagonal resistance line if you kind of sort of make it a little bit tighter. But each time that happened, we reversed back below that 200-day moving average, or at least the previous 2 times. We're now looking like it may happen one more time. So to me, we need to really see a sustainable hold above the 200-day moving average, which is a good reference point. And again, that's this red line here. Before we can say, listen, Apple is probably on its way back to, let's call it at least 112, which would be that reaction high back from last April. So those are a little bit of perspective. Things look much more constructive. But I'm concerned that unless we see these breakouts confirmed, I think the chances are still there that these were all fake out breakouts and that we then pull back. Now, a trade in Facebook that I promise we'll take a quick look at right now. You can see Facebook after earnings last week rallied back right to the upper end of its trading range. That trading range is defined by this very orderly channel to the upside, and we pierced above it. Like every time it's done that for the past while, we basically reversed lower and mean reverted back into the middle, and a lot of times back to the lower end of that channel. So to me, Facebook, not something to chase higher right here either. I think it overshot in the near term, and I'd look to buy that on a dip again. So that's a little bit of a market perspective here as we start moving into the month of August. I hope this helps you guys for a little bit of perspective.